Hi, I'm Sam Slater from FundCalibre, and today I've been joined by Noelle Cazalis, who's co-manager of Rathbone Ethical Bond Fund. Hi, Noelle.
Hi.
So, could you first start by explaining to us what a social bond is and how it differs from a normal bond, please?
Yeah, sure. Actually, it doesn't differ much at all. Um, when you look at it from an investment perspective, it's exactly the same. It pays you a coupon, and at the end of the maturity, you get your principal back. The difference is more in the way the money is used by the issuer. So for a normal bond, it's usually quite broad what they can use the money for. But for a social bonds, the proceeds really have to be dedicated to address or mitigate specific social issues. And so, for example, the COVID-19 bond that we've been investing in has to be invested in projects that will deal with the outbreak, so with the consequences of the pandemic as well. So it's effectively exactly the same from an investment standpoint. And there is just more constraints, I guess, on the issuers in terms of transparency, reporting to investor regularly, so we know exactly what the money has been used for.
And there looks to be a few of these bonds that have come up. What in particular made you choose this COVID-19 bond?
Sure. So the one we invested in has been issued by the African Development Bank. So I guess we like it for a few different reasons. First of all, it's a AAA rated institution. So effectively really credit worthy, really strong capital position. So from a credit risk perspective, we feel it's really safe. And they issued the social bond out of their social bond program. So it's not the first time that they're coming to the social bond market. They've been issuing since 2017. So they're not new to this market, which again, in terms of credibility of their program and the way they deploy the money, we felt is quite good. And also we actually bought this bond as a new issue, which tends to be quite attractive from an investment perspective. Issuers tend to come with a new issue premium, so you can generate some alpha from that as well.
And this COVID-19 bond, what exactly will it fund, and how long will it fund these things for?
This one has been issued by the African Development Bank. So as the name would suggest, is going to be deployed in Africa in order to support and finance countries and businesses against, fighting against the virus. And if you look at a wider remit, I guess, of the African Development Bank, they are here to promote sustainable economic development and social progress in Africa. So this is really key to their mission. They've issued this bond for 3 years, and 3 billion were raised. So this is really interesting, actually, to see the strong demand for this kind of product. And it's been really good and interesting to see how finance can be mobilized very quickly, actually, to allocate capital where this is needed.
Governments are having to throw so much money at the economy just to keep the economies going around the world during this coronavirus outbreak. Are we going to see more of this type of bond, do you think? And is it something, would the US government perhaps issue their own COVID-19 bond to help do something? Or is it something that you think will tend to be more for developing economies rather than developed world economies?
I think we could definitely see more. And so far, the leaders in this market have been more the development banks. But we also have multilateral banks like the European Investment Bank or state-owned banks like KfW that could definitely be issuing that. And I wouldn't see why a government wouldn't do that either. Or perhaps other institutional organizations like the WHO or things like that. I would expect to see more. And I think, if you look at bond funds, a lot of them have high cash ratings. So I think it's a really good time to see new issues coming to the market. And every bond is oversubscribed. So, I think we will see more. Whether then it's called a COVID-19 bond or it's just going to be, deployed to fight the crisis, I don't know. But yeah, that's definitely something that we keep being interested in, and we'd love to talk to issuers about it.
And have you invested in social bonds before? And if you have, could you perhaps give us an example of a different type of social bond you've invested in?
So it depends what you mean by social bonds. So this one is what we call a labeled or officially labeled social bond, which means it applies to social bond principles, which is like green bond principles. So they tend to be quite strict in terms of reporting and constraints on the issuers. And actually, we haven't invested in some of them before. Not that we don't like it, it's more there hasn't been many opportunities for us to get involved. It's still a pretty new market, so we haven't found, great opportunities before. But we are involved in a lot of, I would say, similar investment. Because I guess we don't need that reporting. We have our own ethical research team, so they would assess the impact of every single investment we have in the fund anyway, whether the company issued a special report on it or not. So our investment mandates, I guess, is slightly broader. And so even though we haven't used the social bonds before, we invest in a lot of bonds that we feel have similar social impacts. So some of the example would be the social housing bonds that we invest in, or some of the charity bonds. So it's quite an interesting part of the market. Actually, we've been, I think, one of the first institutional investors to access this market. And they are bonds issued by charities. And really the aim there is to increase the reach of these charities in terms of number of beneficiaries or how they can support beneficiaries. And I remember actually one of the first one we invested in was issued by Scope. And it was a long time ago when I first joined, like 9 years ago. But it kind of explained the market very simply. They raise money to open more shops in the high streets. And then with that, they can increase the turnover. And then with that, they can support more beneficiaries. So that was a really interesting investment. And we continue to look at opportunities like that. And so that's on the social side. But also our fund is an ethical bond fund, not just a social bond fund. So we also look at green bonds. We also look at renewable projects. So yeah, the social bond angle is only a small subset of our investment universe.
And more generally, what changes, if any, have you made in the portfolio over the last few weeks? I know there's been a record amount of bond issuance. So have you been joining in some of these issuances, or have you been sticking with bonds that have already been around?
Sure. So yeah, the recent weeks have definitely been probably some of the most challenging I've witnessed since I joined, and at the same time, some of the most interesting, I guess. I guess to explain the positioning, perhaps I'll just take a step back and go back to the start of the year. So we started the year with really strong credit markets. And for us, it felt that valuations perhaps were a little bit too stretched. So we reduced some of our higher beta positions and have been actually de-risking in end of January. And increasing things like AAA rated bond, really safe, lower risk assets. So we entered actually the crisis with perhaps higher cash weightings than usual and higher weighting to AAAs as well. So as the number of cases started to increase sharply in Europe, we decided to sum or liquidate some of this lower risk position and really increase our cash weightings. And then in terms of how we position the portfolio subsequently, there's been two different phases. I guess the first one is when we saw a lot of outflows out of the bond market. Luckily, we haven't seen many outflows, but what's really interesting is to see a lot of false sellers, and in particular ETFs actually. So we felt there was really a lot of price dislocation in the market, so we used some of our cash to pick up some short-dated bonds or bonds that have a short call date that were trading on incredible yields because there was just a full seller out there. So even though we were still very cautious, we took advantage of some of this valuation. And then we had obviously all the support coming from government in terms of fiscal stimulus, but also the support coming from central banks in terms of corporate bond buying. I mean, the Fed is even buying some high yield names now. So that helped the credit market to stabilize, and that led us to be a little bit more comfortable, and valuation were still at attractive level. So the last couple of weeks, we've been adding a little bit more credit risk. I wouldn't say we like anything. We're very selective. There is a lot of sectors that were challenged, or we felt were challenged before, the start of the pandemic. things like retail, car manufacturer. So we just feel the current economic backdrop is just worsening some of these credit metrics. So despite the good valuation, this is not something we want to get involved in. And what we prefer to do, I guess, is add to names where we have really strong convictions, and especially over the last few, I guess, weeks, we've been adding to some of the banks or building societies that we have in portfolio, where we feel capital positions are really solid, and more importantly, actually, the liquidity position for banks, but also for corporates. If you think the hit that's to the revenue that some of these companies are going to face, we really need them to have good liquidity in the balance sheet or good bank line availability to be able to service their coupon, refinance their debt, and things like that. So we've been adding at the margin, and perhaps a little bit more like the last 2 weeks, but we continue to be very cautious and speak to companies as much as we can, in order to understand, their position.
That's great. Thank you very much.
Thank you.
I'm Sam Slater, and if you'd like to find out more about the Rathbone Ethical Bond Fund, please go to FundCalibre.com.